All right, everyone. I say it absolutely every time. I get the most interesting time to come do this where the markets are super insane. So, as always, if you don't know who I am, my name is Michael Nauss. I'm a chartered market technician. I'm generally speaking a kind of quantitative or systems trader that uses systems, again, combined with technicals for my trading decisions. We're going to hang out for an hour. We're going to talk about this insanity that's going on with the market. Make sure you're asking any questions of any tickers you want me to go over. We will get to as many, if not all of those, as quick as I can. But I think it's a good time to step back, right? Take a deep breath again. This market's been pretty insane here. So we need to take a look at where we can find some pockets of strength. I think that's the most important thing. Is the market is always it's always crashing, it's always rallying. The volatility has increased quite a bit in the overall market ever since the new year. So finding those pockets of strength, finding where quote unquote the large institutions are not selling, to me that's my number one job. I want to go in, I want to look for areas of the market where when the whole market is selling, what are they not selling? There's some that make sense. There's some that are a little bit different that are interesting. So if we can look for that, as a great Jim Cramer said, there's always a bull market somewhere. Let's see if we can find something to buy. So without further ado, I'm going to share my screen and I'm going to find my charts, and there they are. So, right here we are, the S&P 500. Doesn't really surprise anyone. We are below this low. This low is what I have highlighted mostly right here, is this kind of area below this low. And it's because right after we gapped down, we found buyers there, we ripped to new highs. And again, I'm one, I demystify technical analysis. I try to keep it as simple as possible. I want to see the levels, the areas where buyers and sellers come in. And those are the areas that I want to play against, because that's where emotions have taken place. That's where people's P&Ls are anchored to. So those are the areas that I want to watch. And we're well below that. We did that on Friday. We ripped below it, and then we popped back up over it on Friday right here. So unless we see some kind of miraculous buying coming in pretty soon, I think it's more of the same, right? If we zoom into the intraday chart, we undercut yesterday's low. We tried to rally above it. We got right to VWAP, the all important VWAP, and we failed. And right now we're testing lows again. So again, anything could happen. That could have been the low of the day. Doesn't feel like that's the low of the day. It feels like we could potentially be pushing lower here. Now, if that is the low of the day and we do end up rallying, we have a long way to go to get back up to this wick like we got before. Very, very long way to go. So not something that I'm really interested in chasing too much of, just an observation that I had, that every time we get in this area, some amount of buy program is being turned on and pushing us up. Now, we do live in a world where one tweet could erase the 3.2% we're down on the Qs, or the 2% we're down on the SPY. Uh, just not going to hold my breath, not waiting for that. Now, overall, this is a massive sell-off, right? Compared to what we had right here, where we came and tapped that low and bounced. This is very much more pronounced. However, we are still just hanging out near the low of this range. It's not the most scary thing in the world, but it is getting killed. And the fact that if you look, the Qs have been leading the way, right? If we anchor that same low that I was talking about on the SPY, that was right here, the Qs are just nowhere near. They just can't get going. So tech continues to be the worst place in the market to hang out. We want to find better places in the market to hang out. Now, I know everybody loves trading their LUNRs and their, you know, AI and robotics and this and that and the other thing. And those the quantum computers and those themes may come back at some point, but they're not going to come back as long as the market's bleeding, right? If I'm a portfolio manager and I need to sell things because the market's getting hit, I'm not going to sell my McDonald's. I'm going to sell my Rigetti, right? I'm not going to sell my Apple as much as I'm going to sell my LUNR. I'm going to sell the more speculative place. So they're the place that always gets hit the worst, and they get hit the hardest, which is just the nature of it. If you're right on these plays and they rip, then you're going to make more money than if you're holding an Apple and NVIDIA. To do that, you need to accept more downside when the downside comes than those names. It's just the way she goes. So, easy come, easy go. staircase up, elevator down, whatever you want to call it, but it is always those names that get hit the absolute hardest when they do. So, what we need to do is we need to look for where are quote unquote where are the institutions not selling? What are they not going after in order to sell? And there are some areas, and some make sense, and some are a little bit surprising. So first of all, one area that makes a little bit of sense is TLT, and also I guess a little bit surprising. So if you're new to the market, uh, generally speaking, you want to see, or you normally see, this exact action. You normally see a market that when stocks move higher, bonds move lower, and when stocks move lower, bonds move higher. That's been the way it's worked for a really long time, and that's actually not the case ever since they started raising rates. Stocks and bonds were in lockstep. Now we're seeing that reverse a little bit. We're seeing bonds actually move higher as these stocks are moving lower, and today is no different. So that's just something to note. That means that essentially the market's not scared about interest rates anymore. We're scared about other things, and those other things are tariffs and geopolitical stuff and that kind of thing. It's not so much about the individual names when it comes to, hey, we were worried that JPOW is going to jack up rates on us. Which makes sense. But so if you're looking for flight to safety, that's one. I don't think a lot of people in this crowd are going to add a lot of bonds to their portfolio, so let's keep moving. XLE Energy is actually doing very well today. And if you look, USO isn't. So that means there's other areas of energy out there and other areas of the XLE that are interesting. Now, UNG is doing very well. Full disclosure, I'm in UNG from around 17. I'm holding this one for a long time. So that's working. One way to get a hold of that is looking at the XLE and saying, okay, well, if oil's not moving, some other things need to be moving. One of those things is natural gas. Natural gas continues to do very, very well here, continues to push higher. So that's a place to watch. Solar's like a dog if you zoom out. I mean, solar has not been a profitable place to hang out since 2021. It's down to 2025, but starting to get a little perk up here. So we might want to watch some solar stocks. I think like CEDG is one to keep an eye on. That thing's grinding up a little bit. Now, overall downtrend in solar, but is interesting that's popping up. The thing that interests me the most, I think, when I was going through, and all I'm doing is I'm sorting an ETF list that I normally watch, and I'm saying, well, what's up on the day? The Qs are down almost 3.5%. The SPY, as I'm looking here, hitting new lows. Everything's selling off a little bit, but we need to look at where is not getting hit. And home construction. So ITB is the iShares Home Construction Index. Massive level of support going back for a long period of time. Every time we've hit this zone, we've got a little bounce. Looks like that's what's going on today. Looks like we're having a little bit of a bounce here as well. I do see in chat, I do see all the tickers. I'm just going to give an overview of what's happening in the market before we just dive into those. So yeah, so the home builders are finding support around this $100 area. Could be a good place to look, right? Your Toll Brothers, I don't know, I'm from Canada, a bunch of the United States home builders might be a good place to look. And then the fact that they're strong, this should show you a couple things, right? Uh, it's a pretty good bellwether for the overall economy. If people are building homes and homes are being built and people are putting money into home builders expecting the homes to be built, that's not really saying that the market is insanely bearish. It's not what you see if the economy as a whole is going to dip deep into a recession. You don't see home builders starting to get bid up. What this shows is that there's, very specific fears in the market. And those very specific fears, again, are trade wars and tariffs and that type of thing. It's not that they're worried about a giant economic recession, especially because, again, the Fed's got so much fuel to play with. Other things, again, that make sense. Water, so utilities are doing well. These are all flight to safety kind of ideas. Utilities, XLP is staples. That's hitting new all-time highs. These, again, are just your typical flight to safety plays. If I'm worried about the world, I want to buy McDonald's. And if I'm worried about the world, I'll buy some Walmart. Maybe not some Walmart, but I'll buy some McDonald's. Kroger, I saw hit new all-time highs yesterday. CL, Colgate, this is popping up. So these are just places where need to push our money into. We got to always think of institutions that move the market. They are not allowed generally to go to cash. They can't. Most institutions out there cannot short and they cannot be in cash. They've got mandates that say you have to be 90+% invested in the market. This is why on days that the Qs are down so much, you'll see XLP up a bit because like I got to put my money somewhere. I just have to. So if I'm going to get out of the market, I have to put it somewhere. Well, if I put it in something like Colgate, well, Colgate's not going to go to zero. People are still going to brush their teeth even if the market's getting hit. So I can sit in there, I can make some dividends, I can do that. That's what the flight to safety talk, which you'll hear a lot, happens. So again, all of this makes sense. What doesn't really make sense to me is home builders. So that's something that we got to keep an eye on and keep a little bit of a focus on. Again, shows me that with TLT, this is not end of the world thinking of the market. This is the market's got a specific issue that they've got to figure out. And that specific issue, again, is things like tariffs and all of that. So if you can find companies that have nothing to do with tariffs, then those companies I think are going to do better than the other ones. Now, the benefit of this being the thing that worries the market is that it's very easy to resolve, right? If this was, oh, we're worried that there's going to be this kind of deep, prolonged recession, and that's why we're going to sell off home builders, and that's why we're going to sell off all these names. Well, that's harder problem to fix, a deep, prolonged recession. What isn't hard to fix is things like these, geopolitical, you could call it, tensions with different countries. They come out one day and he does a tweet and says, we figured it all out. Everything's good now. The market screams higher, just rips to new high. So, again, easy problem to solve. And it's one of those that it's going to take a little bit of bobbing and weaving around the market to figure out where it is that we're going to actually, end up going. So, all right, now let's hop into your guys' picks there. Now to give him a little speech, hopefully calm people down a little bit. I don't think big cap tech is going to be the place to hang out for a while. I think you're going to have to get a little bit more imaginative than before and just, hey, show me this, AI robotic space shuttle thing and I'll just buy that. I think it's going to be a little bit more boring for a little bit anyway. So HRTX was the first one that I saw in there. This is a therapeutic company. This is interesting. Anytime you see this particular line, this means I had an alert set at some point, so it came through one of my systems. Again, I'm a systems trader, which just means that instead of just looking at all these charts and deciding to necessarily buy or sell a lot by doing it, 90% of what I do is completely systematic, and then I take the other 10% or so of trades as a way to stay involved, a way to hopefully add a little bit of alpha to my system. So one of my systems like this setup around 211 on a pullback, and it's probably because of this prior resistance right there. So this overall for a long-term play is weak and down. However, for a short-term play, you have just an interesting little pullback. So you have a nice pop up that happened after earnings right there. So on earnings, that's what you want to see is earnings being green means they beat across the board and you had a little bit of pop up from there. Now you have some consolidation. Now it's important with these momentum plays to make sure that these consolidations hold, right? And anytime I see a therapeutics company, I get worried about how well they're going to hold. It's one of those in which that you have, if the pullback on these gets too deep, that just means the momentum is gone. Everybody has kind of moved on with their life. It's, some of these momentum stocks are like the meme stocks out there. They're giant games of hot potato. Right? I want to be in something while it's going, and then I want to get out when the momentum's over, and I want to move my money into something else. So that's why you want these shallow pullbacks, because it means that on any dip, there's buyers, and it means that the sellers aren't aggressively moving on to the next thing. So I would say, right, as long as it holds this kind of 211 where the breakout happened right there, you're probably okay. Right? This high is nearly $4. That's a great, and nearly a double from there. That's a nice little push as well. And then we have, right, highs here, 41. I don't know if I'd hold my breath for that, but it's a therapeutics company, so who knows? I always say with these kind of names, you have to have some understanding of the pipeline when it comes to what it is that you're going to, uh, when are they coming out with whatever phase on their trial is, because right, technical analysis is great. I'm a CMT, but if you come out with good news and if you come out with great news on phase three, your technical analysis doesn't matter. It's going to rip. Come out with bad news on some sort of trial, it doesn't matter what your technical analysis is, it's going to drop. So you got to know that pipeline. And you either have faith in whatever it is that they're trying to create, you can be long it, or if you don't, then you should find other areas of the market to go, because these are things that can trade between those binary events, but are generally just caused by binary events. Is whatever pipeline of drugs they have in the market. They're going through FDA trials and however long they are, if they succeed or not. Until then, it's just, is this thing, how much cash is this thing burning in the long run? Pizza, old Papa John's. So I'm going to put this in like that staples category, right? Where nice push up here, earnings was positive, which is good. Consolidation right here. This is one of those things like McDonald's and Colgate and all of that is, it's going to be a little bit of a flight to safety, right? Anytime you see that this D at the bottom of the screen, they pay dividends. And that's where people want to hang out right now, is they want to hang out in big dividend players, because if the market's going to be a problem for a couple years while all of this craziness is going on, it makes sense to sit and hang out in some nice dividend payers, right? Some stocks that aren't going to go up huge, aren't going to go down huge, but they're just going to pay me to hang out in them. And I'm not talking again for us. I know the market here, but I'm talking for the big guys out there. Again, they have to put their money somewhere. That's just a bylaw. They got to put their money somewhere. So why not pizza? Why not McDonald's? Why not things like this? So it looks good. I don't think you're going to get a massive rip anytime soon, just because that's not really what's happening in the market. And this is kind of a slow burner. So the fact that it's recovered nicely, it's above this low right here, right? It's above this zone. That's interesting. So that's a nice look. You call this a bull flag, call it whatever you want, but I like consolidations after big strong moves. Right? There's some sort of news event that came out that was good, big strong move, consolidating. And again, anything that's going up right now when the market's going down is something to watch. Neo EV. So the problem you're going to have a lot with some of these names is the market's not really digging super speculative action, right? It's not really super jazzed about, I'm going to get this thing that may end up making money in the future. I want things that are making money right now. That's going to be your biggest problem with any of these speculative names. There are times for big speculation and there are times not to, and this is one of those times not to. However, this thing looks like it may have found a floor, right? And these floors they come in with, generally speaking, value investing guys, right? Those value investing nerds will create floors like this. And what a floor like this is just saying, every time it comes down there is someone who has crunched the numbers and say, I think Neo's worth about $4. So it comes down to $4, people buy it. It comes down to $4, people buy it over and over again. So that's your level to play against, I think, right? If it makes a new low from here, it can go lower, right? The whatever price you're at, it can go 100% down from that price. I know it has earnings coming up, so what I would just look for is, does it end up holding that price, right? It's estimated to lose money, right? Anytime you see a company losing money quarter after quarter after quarter, your thought should instantly come in and say, when are they going to dilute us? Because they have to. So what you can do is look for things like, how much cash do they have on hand? And just say, is this something that they have to dilute me quickly? Because if they have to dilute me very quickly, then I don't want to be involved in that. The one thing you don't want on the other side of your trades is the company, right? And ask the AMC apes, right? This thing has gone from what, $400 to $3, or is this even further than that? No, $400 to $3. And there's some people out there that still think it's going to $400. But the problem is, the float has been expanding the entire time because the company cannot make money. So what it's doing is it's selling to retail every time it needs money. Every time there's a pop and it needs money, you see it's still losing money, that they have to sell it back and they have to say, okay, well, either we go bankrupt or you guys buy more of our shares, which dilutes the shareholders over and over and over again. Not what you want to see. So when it comes to something like Neo, they've been doing the same thing for a while, right? They haven't ever made a dime. So at some point, they need to come to people with their hands out. So I would look at that. I think that would be a pretty good kind of understanding of what the price should be, whether or not this price is warranted. If they have a whole bunch of cash on hand, maybe. But yeah, again, losing money day after day, week after week, month after month is not something you want to do in this market. That's something you can do in a zero interest rate environment. It's not something you can do so much in this one. So for me, it's if you want to take a short term trade, you're trading it off this $4 to 350 area, and you're saying that's my price. If I can stay in there, great. If not, time to go. Right? That's the way I'm looking at it. Anyway, Rivian, this is going to be kind of the same story a little bit, right? Earnings are out of the way, but again, continuing to hemorrhage money and continuing to find this floor right here. I think part of the problem too is people don't think this administration is going to be too big on pushing EVs and seem like more of a I'm going to push oil and gas and things like that. I'm not going to push EVs super hard. That could be right or it could not be. I'm not a U.S. citizen, so I don't follow your guys' politics, but that's part of the thinking is that this thing is going to be driven based off of what happens policy-wise and whether or not that policy is going to be positive or not for EVs. So if you got a company that's losing money in a high interest rate environment where people are worried about the overall market, just not going to be a place that people are super excited about. Like, again, one example is I'm really jazzed about the psychedelic space. Right? I think that psychedelic space is super interesting, and they've got some trials coming through and all that. It's not going to be the time I'm going to be plowing a whole bunch of money into it unless my plan was to do something like dollar cost averaging, because these are pre-revenue companies, so they're losing money every quarter. They are, if they end up getting a buyout or a trial success or something, they'll do great. But until then, it's just going to be hard going. So it's one of those, you really got to, this is why you'll always see technicians do what we call the top down approach, where we look at the overall market first, because that will give us an idea of what environment we are in. As we're talking, the SPY is hitting new lows, right? The Qs are now down 3.5% today, and things are hitting new lows, right? This is the environment in which people get defensive, right? It's not really the environment in which they get super speculative. So again, right? Neo and Rivian, kind of both the same. Money losing companies hanging out at lows. There is a lot of statistics done to say, hey, you buy things that are breaking new highs. You generally don't buy things that are sitting at lows, but at least you know you're out, and that's the most important thing. There's no other thing about trading. If anyone comes to me and says, I want to buy this here and I know exactly where my stop loss is and I've sized myself correctly, that if I'm wrong, it won't hurt that bad, that's a great trade, regardless of whether it technically makes sense or fundamentally makes sense or anything like that. That is a great trade simply because you have that covered. Nobody is right all the time. There's not a single human being that knows what's going to happen next in the market. That to me is the major power of technical analysis, is that I'm not going to know with any more certainty than anything else what will happen, but I'll know when I'm wrong, right? And that's the most important thing. I know when I'm wrong. I know when I've got to liquidate my position and go, that sucks. Go outside and kick rocks for a while and then come up with another idea, right? And if you don't do that, then you're just a bag holder. Then you're just hoping, right? You're a bag holder hoping that something kind of turns around. AVGO, Avgo, Broadcom. So Broadcom's interesting because it's pulling back just like the rest of the market. However, it's pulling back to this gap right here. And so far, it's finding that gap as support. I know this because this is something I'm actually in a little bit, right around this area, just for this reason. Is that we gapped up, massive earnings gap, then we've been pulling into that range. And like I talked about, these are the trades that I love because I know exactly where I'm wrong. I don't need to think too much about it. And if we're closing too much below this low right here and we're into this range, I'm wrong, right? We had positive earnings. I'm surprised to the upside. We beat on revenue and we beat on income, right? So we beat on both sides, and we're hanging out right at this low. We're hanging out at a very important level. So we're hanging out in an important zone, and it's doing well, at least financially. So this to me is an interesting place to take a shot. If I'm right, that's where the shot takes place. And if I'm wrong, I know right where I'm at. So if I'm right and this thing gets back up to this high, great. And if I'm wrong and it breaks this low, you can just see the risk reward, right? We can draw it out. But let's say I'm in from right here, and that's my stop loss. So if we get to new highs, it's a 4-to-1 risk reward, which means I think if I think there's like a 25% chance that's going to happen, that's a neutral EV bet. So if I think there's any better than a 25% chance that this thing will work its way to new highs before it breaks down, then it's a positive EV trade. That's what all of our traders just look for. Next, we have Amazon, and then we have AMZN. Amazon is the same kind of setup, right? We're big gap up and we are pulling back into this range, and we're putting in some bottoming tails here. So it's holding at least this range for now. What I would want to see is pretty quickly get above this $200 area. This $200 area was a big zone. This is where Bezos unloaded a whole bunch right in this zone right here, and then kind of held down the stock for the longest time. So that 200 area, I think, is where we're anchored to on Amazon. It's going to be very important that we can end up getting above that. Again, earnings was positive, but market didn't really care. You don't like that, right? You want to see, my perfect world is where earnings were negative and the stock ripped anyway. That's what I want to see, just because that shows that they said something on the call. If you're real hardcore, I know on Stock Twits you can listen to the calls as a technician, not something that I'm going to do, but I know a lot of people do that and find some value from it. I want to find out where they said negative things and the stock ripped. That's what I want to see. That's for me a perfect thing to look for, because again, the market didn't like the good news, so it depends what's going to happen. But for me on Amazon, it's all about that $200 area, just because that's where I've never seen Amazon, if we zoom into that zone, just coil that nicely. It's because somebody, we know who now, Bezos, had a giant sell order hanging out right here, just smacking it over and over and over again. So that seemed to get everybody involved in that price. You can see when it broke 200, came back down, tested the other time, pushed through, and now we're hanging out a little bit below that. So I'd want to see that reclaimed fairly quickly, but if it breaks back through 200, I think for me, that's going to be a buy. If we can get back through 200 there, and then I'll put a stop at whatever the pullback low is. That's how I'm looking at that. These healthy companies, right? If the market is going to be turmoil for a long time, these kind of big, not right, Amazon's not big cap tech. They do have a lot of tech with them with their web services, and they're trying to get an AI and all that kind of stuff. But just a positive underlying retail. The amount of times that Amazon comes to my house is just insane. It's absurd. So these are companies that if we are going to have a recession, or if we are going to have bad times ahead, these companies, in my opinion, are going to get hit less hard than the more speculative names, just because people are still going to buy stuff on Amazon. Maybe they buy a little less, right? If the market gets really hit and people start losing their jobs, they're still going to buy stuff on Amazon, right? So that's what I'm looking at. Anyway, on that guy, AMZN, all the AVGO, Amazon, and now AMZN. People are just going through the alphabet. This is great. Right? I wouldn't buy it here because it's a little bit overextended, but this is a great looking chart. And the reason for it, again, let's always just anchor to, let's anchor to the cues. And I want you, as we're going through every other chart we see, this is what technicians do a lot, is keep this chart in your brain. This is what the average kind of tech company is doing. This is what the average large cap is doing. This is what the average small cap is doing, right? Everything's kind of getting hosed. So when you find something like this, it's actually doing okay. You know, there's positive catalysts. So there's positive earnings. There's right news events that are coming out. Something is pushing this higher, right? As technicians, what we do is we ignore what those things are and we follow the price that's being caused by those things. And it's butting up near highs. Now, the reason I said I wouldn't buy it here is because that's a pretty significant move for the stock in pretty much a straight line. And we are hitting this prior resistance around 338. So it would not surprise me if we get there and we bump our head and we spend the next couple days or weeks just consolidating around this zone and then we push through. That would be what I would like to see in order to get involved in something like this. But right, if we go to a weekly chart or even longer, it's close to all-time highs. Right, the rest of the market is not close to all-time highs. This is close to all-time highs. So it's a very good look there. It's very strong. And if you have earnings, right, again, you're beating. It's one thing I love about that TradingView does is all this, right? Green up arrow means they beat on something, generally a upward surprise on one of the names. And if they beat on both, that's good. You can see, look, they beat more than they miss. But Amgen, obviously being a biotech company, it's not going to be as crazy as whatever that really small cap biocap tech company is. If they lose, if something that they have on the go fails, it's okay. They have a lot of things that they sell anyway, but it's still going to matter. So if you're investing in these names for the long run, you should know the pipeline of things that they're working on and what's going to come out and doing that kind of research. Because for a trade, it's a bit overdone. But if you're looking to stay in it for a long run, then man, you have found something with relative strength to the overall market. So keep going, have at it. Looks like a good one. Let's talk about old Ford. Ford up today. Yeah. Ford to invest money in Germany. Cool. Overall, pretty big dog here, right? 2020, all right, massive push up. Now it's just kind of consolidating and stuck in this range. This is just an ugly chart because it's not bullish, it's not bearish, it's just kind of range bound. Like we talked about with Neo and Rivian, I don't know. Everyone's making a big push to EV. I don't know if this administration is going to be super big on EVs. However, at least with Ford, they have kind of I don't know, call them legacy cars. Are we old enough now that we're calling them legacy cars? That's going to be a lot of their pipeline. Right? Again, unlike those other ones, these guys make money, right? So they're going to be healthy when it comes to cash and finances. So what Ford is going to need to really rip is tariff news. That's the biggest thing when it comes to these car companies is that tariff news is going to be a big deal, right? If there's a tweet that comes out today that says, all right, we've settled our differences, no more tariffs, right? This thing is going to just absolutely pop because I think that's what it's getting hammered, and I think that's what has been kind of priced in here for a long time is that just again tariffs are going to just they buy the steel and everything from somewhere else and then they manufacture it somewhere else and they come out with the car, right? There's the extent of my fundamental knowledge on Ford, but this is going to be one of those names that's going to be suffering more than others when it comes to these things. Wolf, TeraWulf. This is a Bitcoin miner, right? I believe this is a Bitcoin miner. Is TeraWulf a Bitcoin miner? WULF. Bitcoin holdings. Yes, so they are a Bitcoin miner. Okay. It's going to move with Bitcoin. So I've said this a lot, and I'll stick by it, that for a while there, names like Mara, which I traded a lot a couple years ago and were really good trades, and Riot, and in this case, Wolf, they were like leverage Bitcoin plays because there was no ETFs at the time. There was no way for traditional, what do they call us? Someone called TradFi, these TradFi people, to trade Bitcoin on exchanges before they were not able to trade Bitcoin via ETF. You have to move your money over to either you trade the futures, but those were never good or liquid. Or you had to, have some of your money in traditional exchanges and some of your money in crypto exchanges, which I don't think is great either. So people would trade Mara and they trade all these names. Now there's so many Bitcoin vehicles. There's double leveraged and inverse, and there's so many different ways to trade Bitcoin out there that nobody is really trading these as much. The reason for it is because it's like Bitcoin that loses money, right? So if you look at TerraWolf, I know I'm hampering on this as a CMT, but it's just the environment we're in. We're in a high interest rate environment. So you have to think about it. If I am rich dude, I'm some, worth $200 million, and I can put millions of dollars into TerraWolf, or I can put it into bonds and make 7-8% a year going forward. What am I more incentivized to do right now? I'm more incentivized to put my things in interest bearing instruments, especially with the volatility of Bitcoin. If I want to exposure to Bitcoin, I don't need a Bitcoin proxy that loses money every quarter. I can just buy the ETF, right, and just own the Bitcoin, right? Own the price of Bitcoin. So I think these are a little bit less interesting when it comes to their correlation to Bitcoin than they were. So that's the first thing, is that they didn't participate so much in the Bitcoin skyrocket. They're more being traded on their own merits. Now, if something like Mara, if they're going to come out with some of these where they say that, I think Mara said they're going to mine the Bitcoin, they're going to hold it, and they're going to do like a Ponzi scheme like MicroStrategy is doing, where they're going to do some like weird bond stuff. Then yeah, you could maybe take a play off that. But for me, if I'm looking for leverage Bitcoin, I'll just go. Is that BTC Z? That's the inverse. BTC X. There's a bunch of these. Chat will correct me, but there's a bunch of these like double leverage long. BTC Z is the inverse, but there's a bunch of instruments to do this. Now, if I'm looking for um, a if I'm looking for an equity in particular to trade with it, I think I'm going to go more with like a Coinbase or a Robinhood. If I think Bitcoin's going to resolve higher and I want to trade Bitcoin because they make money, right? So these things are you're holding, you're basically holding exposure to Bitcoin, but you're holding exposure or to crypto in a whole, but you're holding exposure to crypto in a thing that makes you money over time. Whereas with these miners, you're holding exposure to crypto in something that loses you money over time. So that's obviously a big difference. And again, this is someone who I worked at a crypto miner way back in 2017, which is probably a story for another day, building arbitrage bots and things like that, trading their Bitcoin essentially. Hard business, right? Paying a lot in energy. The machines are breaking down all the time, and you're buying new ones. It's a kind of a dirty, expensive business that you just have to be a little bit careful of. So while we've been talking, we can keep checking back on the SPY here. So we tried to rally a bit, didn't even get to VWAP this time, and now we're selling back. So it could be, I'm kind of looking at this, right? Because I am looking to take a little bit of a bounce play for a day trade at some point. This area right here, maybe this acts as support for the rest of the day, and we kind of pop back up a bit. Like, I'm not saying, right, we rip and right we close yesterday's high or anything, but maybe we get back over this low, maybe, who knows. But yeah, we tried and we saw and we failed there. Rigetti, RGTI. So the way I look at these is kind of what I was talking about before, is that these are very hyped plays, right? This company doesn't make money. This company doesn't make anything. This company, on a hope and a prayer, will be able to do something with quantum computing years from now. Now, that kind of thing is very exciting when animal spirits are really turned on and people are swinging for the fences, and there's, making money in the market, and the economy's looking great and everyone has jobs, and that kind of thing. So that could come back at any time if that momentum kind of comes back. Until then, I don't even know if this thing is going to crash, but it could just be dead money for a long period of time, right? It went from absolutely nothing, right? This is 73 cents and ripped to 18 bucks. So this was the whole quantum computing phase. Now we could be in the phase where a lot of these people are probably still holding from 20 bucks down at 7. It's unfortunate they didn't have an exit plan. You only trade these crazy momentum ones, in my opinion, if you have solid exit plans that you will stick to. Otherwise, don't. The Until there is, again, the animal spirits come back or some sort of news event, I think these things are just dead in the water. I think this might be stuck between, let's call it $6, and I know this is going to be a huge range, but it could just be between this $6 and this 14 for a long period of time. And that range will most likely, in my opinion, get tighter. So it's only going to be trading in, a couple dollar range, which if you're really fast on your scalps, maybe you can do okay with. But it's one of those things. They're not doing anything, right? They're kind of like a drug company in a way, right? They're kind of like the psychedelics that I mentioned before. They're kind of like that, where they are trying to build something, and the first one to build the thing is going to make a lot of money, but they don't have the thing yet. So you're betting on, will the company stay alive, and how much will the company have to dilute us in order to build the thing? And will this company be first, or will it, for something like quantum computing, will Google or Microsoft just completely destroy them, right? Because they're losing money a lot, and if you're losing money, you have to get it from somewhere. You either raise it through debt, but interest rates are very high right now. So you're going to raise it through equity. So that means you're going to sell to your retail people, us. So that's not a position I want to be in. So again, these are momentum plays. In my opinion, they should be traded as such, in my opinion, which is to say, you get in while the getting's good. You have a game plan to get out. You're not going to nail the exact top when you get out, but you're going to try. And when it's done, it's done. And then, so for me, if I was interested in these names, I would just be checking on them every few weeks, right? You set an alert right there. You say if it gets through there. Maybe right now you have an alert set right here at like 10 bucks. You say, okay, if it gets through 10 bucks, maybe I'll take another shot. But know what environment you're in at the same time. If we are in a lame, boring environment, right, then it's not going to be somewhere where everyone's like super jazzed to trade these type of things, right? You know, it's going to be one of those where when the animal spirits come back, maybe they'll come back into quantum computing. Most likely they'll find another thing to go through. Calm, CALM. Yeah, these ones. It's interesting because KR hit new highs. Again, I'm Canadian. I think, right, that's a grocery store that probably sells eggs, but those prices seem to be coming down a bit. Right, these have been just monster stocks for a very long time. So I was actually looking at this one earlier, and we just have a pretty decent level right here, where we're, you know, this low right here, we bounced, and now we kind of made this low right here, and now we're bouncing. So I think you got a nice little pullback on something that's a relatively strong stock, on something that makes money. I think this is an interesting play. If we get a push from there, maybe to highs, these aren't going to, right? You're not going to double eggs, right? Well, I guess they did. Not quickly, I guess is the best way to put that. So you've got a pullback in what's a really strong name. Seems to me like that's something that you could, if you're interested in, take a shot in. And then you know exactly where you're wrong. If we get under kind of $81, $82 a share, it's probably not the move. And we can go from there. And as SPY is ticking back to those new lows. So yeah, it's been a hard road today, that's for sure. All right, Udemy. Yeah, Udemy. This is something. Unity. Sorry, Udemy is also a company, but that's like the learning one. This one is the video game engine, I believe. I was really hopeful on this actual breakout that happened right here that we were going to get a nice push higher. It doesn't look like that's going to happen. Right? It doesn't look like we're kind of in that zone at all. So to me, this is just one of those failed breakouts. Right? I was interested in getting involved in this area if this breakout held, but it didn't. So right, you take your shot. If it doesn't work, you get out, you move on. That's the thing with breakout trading. Breakout trading, generally speaking, has a sub 50-50 win rate. If you're trading breakouts, you're going to be wrong more often than you're right. But you just need to know that this is one of those things that if you're right, these things can go like gangbusters. So you just have to manage that risk very, very tightly and very controlled for when and if you're wrong. In this case, it just looks like it's one of those that just wrong. So looks like a failed breakout. I would just kind of mark these highs if you're interested and set an alert that's around 28 and a half. If it can get above 28 and a half, I think that's the place you take the shot. And if it loses 28 and a half, then you're wrong. So I think that's a pretty clear chart there. The reason I'm interested in this one is just they beat earnings all of the time as a making money here. So it's a software, so it shouldn't get smacked too much in the whole tariff, whatever. Uh, and it just hasn't stopped going down, you could say, in May 2024. So nearly a year of it stopped going down. It's not going up, but it's not going down anymore. So you take something like that, and that could end up being a phase one accumulation. Now, it did the same thing back here and then just went down again. So it certainly could. This just seems to be one of those things that eventually might be a really good investment at a bottom. I'm just going to wait until it gets and closes and holds above a really important level before I get too interested. ELF. This is something I'm watching too because this thing was just a beauty back here, right? May 2022 at $19 all the way up to 200. This reminds me of that CELH, the Celsius. Same thing around 2020, just went like gangbusters and then completely fell apart. What I like to do with these names, if we're betting on a recovery at some point, is you just slap an anchored VWAP on the all-time highs. And if it can get and hold above that, that's where I start taking my shots. So right here, maybe I would have taken a shot. That shot would have failed. So you get a little small paper cut, then it comes down, and then maybe you get a chance to get back in a little bit earlier. But nice looking day today, nice strong day, and it's got this gap. Thing about gaps, I need to study this at some point. There's this quote about all gaps get filled, which is absolutely not true. But the question is, do the majority of gaps get filled? And what does that look like? The idea, the reason that technicians like gaps is that there's no price discovery in that area. So there's no emotion, right? Technical analysts are looking for trend. Is this thing going up or is this thing going down? And then they're looking at areas in which there is emotions, areas in which there was buyers and the areas in which there were sellers. That took place before. And when that changes, then you get nice moves. So it ends up being one of those things that if you get a change and you start to see these starting to push up, there's potentially no resistance in this zone because there's no one with like huge emotions in this area. So sometimes you can get like these vacuum moves from one gap to another. And those are always fun to be in because there's no thinking, just rips, right? So AMT. It's a REIT. So this thing, generally speaking, won't move. Right? REIT, real estate income trust, essentially just means it buys and holds real estate. So most of the time, people are buying these for their dividend. Right? They're collecting 1-2% a quarter, and it doesn't really move too much. On top of that, it's just really stuck inside this range. So there's not too much that technical analysis can do for you right here when you're stuck in a range like this. If you think it's going to drift back to the high, then it's a bit of a goodbye from here. But these things are going to be relatively slow. But again, it's a great place to hang out in. The market likes these. The reason it's probably up today is because the market is down so much. it's, getting hammered a little bit. So people like to go into places and say, okay, if I can stay in this AMT and say it doesn't move for a long period of time, then great. I'll just get paid my dividend. I won't lose any money. When things get interesting again, I'll take it out of this and I'll put it back into something interesting. That's why, again, that's what people mean when they say flight to safety, right? They're just looking for where can I put my money in an environment that is just give me a couple bucks, keep up with inflation while I'm waiting for that next bull market or that next breakout. That's why these things are moving. Kava, never been to a kava. Don't have any around my little fishing village. One thing I love to do with IPOs is we anchor VWAP from the first date, and that becomes an interesting price. So what an anchored VWAP just shows us, if you guys don't tune in when Brian Shannon's here, you really should. But what an anchored VWAP just shows us is that the average market participant for all of this entire life is sitting right here around 85 bucks. So from the start of the company, this average buyer, if you were DCAing in, that kind of thing, that exists around right here. You'll see a lot of kind of algorithmic games taking place there, a lot of hedge funds filling orders around VWAPs, things like that. So now that we are down and into that level, that's great. So what we'll end up doing is this is a interesting price if you wanted to do a dip buy, because that's again that anchored VWAP from highs. You can see it acted as a little bit of resistance here and a little bit of support here. So it has been respected before. We haven't seen it in ages, but now we're back down there. So if you're looking for a pullback in this name, it could be an interesting place to take a shot. If we get too far below that VWAP, you consider that broken and you move on. But a strong stock pulling back pretty harshly, I don't hate it. And we're at 80 bucks. If you're going to go back to highs, that's a double. That's crazy. I wouldn't bet on that, but maybe you get a little bounce to 90 or 100. And then again, if you're wrong, you're probably risking to like 75. That's the kind of shot I think you take in these markets. I definitely think we're in a buy the dip, sell the rip type market. And that's just something that, repeat, repeat, repeat. So Kava again is an interesting right here. I'm actually going to make a note of it. What I would probably do is just you can create an alert and say if we are crossing back up over VWAP once per bar close, then tell me. So if we cross back up below this VWAP, I'll get alerted. I'll see what the stock looks like then. If I like it, I'll take a shot. It's a very good way to systematize your trading to make sure you're kind of trading correctly. Instead of hunting and staring at tons of different charts and waiting until you get an entry. If you like a stock at a price, set an alert, walk away. It's 2025. There's no reason, in my opinion, that people should be staring at 8 million screens and all these different charts. Right? Set your alerts, set your levels, do something when they get to those particular levels. ACHR, Archer Aviation, this is going to be, again, one of those more speculative type plays. However, as I zoom out, this level right in this zone, so anywhere from 8 to 7, pretty big zone. But it is prior resistance, resistance, resistance. So it's an interesting area. So again, these are, again, as I'm not, I am, I know I say this a lot, but I'm definitely trying to demystify technical analysis, right? What we're looking for in technical analysis is relative strength. So what's doing the best, what's doing the worst. Trend is the thing going up, is the thing going down, because we know that the thing going up has a better chance of going up than the thing going down. And then areas of interest in which there's buyers and sellers in the past. Now, anyone who's using, moving averages or VWAPs or whatever, they're just, instead of using flat support and resistance areas, they're using dynamic support and resistance areas. But they're doing the same thing. And the idea is that if we can get a good price on an area of interest that we think is important in a overall trend, well, then we know trends generally persist, and that we know this is an area of interest for this trend. We've got a trade, right? We've got something that we can potentially do. So this is interesting. If you like this stock, right, this kind of 8 to 7 area is very important. So you could get involved somewhere in this zone and take a shot, but we're back into the money losing company, and we're losing money in companies that, we're in a worrisome part of the market where everyone's kind of worried about their future. And we're trying to see what's happening next, and we want to be generally looking at money making companies in this time. So I got two more here. That's probably all I have time for today, so let's go through those as well. AGCX, Crane Shares Artificial Intelligence Technology Inc. That's kind of cool. So it's an AI ETF. So cool thing is you can always go AGIX Holdings, and you can always type that in, and you can see what exactly are these guys in. So that's always important when you're looking at an ETF. They have to, by law, um, post their holdings somewhere. Holdings right here, right? So it's not gonna, it's not a secret, and it's surprising how many times they say that, and people go, "Oh, I didn't know that." So somehow they have Anthropic, who makes Claude. That's kind of interesting. So Meta, Microsoft is 13%, and Amazon is another 5%. So basically 20% of the company is Meta, Microsoft, and Amazon. Apple, NVIDIA. This is the Mag 7. They hold the Mag 7. So this is going to be moving in lockstep with the Qs. Right. So you can, if you want to, you get that little exposure to Anthropic that makes Claude great. But again, this is one of those things. I look at this, I'm like, I'm just going to trade the Q. It's going to be more liquid. It's going to move roughly the same. And it's just why I think that exercise is hugely important, right? So, all right, let's do one more, and then we'll call our day there. We're going to do WULF, Petco Health and Wellness Company. Earnings coming up, so be careful there. A couple beats on earnings, but still losing money, so that's a bit of a problem as well. Right, remember these themes, like I see someone mentioning Archer is pre-revenue but has catalysts and themes. Thing about theme trading is wicked in bull markets. Theme trading and storing trading generally will get killed in bear markets, and the reason is because people just want to own less speculative names. So just be careful, right? Not saying don't do it, but just know that they're riskier plays, which means riskier plays, when you're right, you're going to make more money. When you're wrong, you're going to lose more money. That's just the definition of riskier plays. But just in this particular market where, again, as we are speaking, the SPY looks like it's curling back to new lows again, we have to be very, very careful in things that would happen. So same with, I look at this, right? I was talking about ELF, which is strong stock pulling back. We talked about Cavo, which was a strong stock pulling back. A lot of those strong names pulling back are interesting to me. This to me looks more like a broken chart. Now, if you want to take a shot, you're basically just playing against this low right here. If you pull this back, you can see how much this kind of 225 was support back here, resistance here, or support here, and then maybe support here. So a lot of psychological stuff going on around this, but the stock's in a downtrend. It's not making any money. So when are they going to dilute you is the question. Down from $24 to $2, so down 90% from highs. Very speculative. If you want to take a shot, you definitely take a shot there. So, all right, guys, I appreciate everyone for coming by and hanging out. I love doing these. I'm glad people enjoy them enough to come and chat. I'm generally back on Friday, and then also again next Monday. So biggest thing to keep an eye on the market is, are we going to hold yesterday's low? Or are we going to get back above yesterday's low? If so, maybe a bit of a ripper into the close. That's one thing that I'm watching. But until then, it's a beaten down market. Make sure these are the moments where you kind of keep your powder dry, you keep yourself safe, so that when the market gets interesting again, you're back in action and you're not climbing out of too big of a hole. You've just stayed in cash, or you stayed very tactical and you've been doing okay. And then when the market gets good again, you've got all of your ammo to make a bunch of money. That's the hope. So, all right, I'll see you guys later. Hello? Are we still on? Thank you. I see a lot of thanks. I'll thank you back while we're waiting to end it, but I appreciate it. You guys have a good one. Technical difficulties are always fun. I can, yeah.